Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Dave Bartosiak here, and I've got a top stock pick of the week. It's Advanced Micro Devices, ticker AMD. Now, AMD is a funny story because they used to always be second fiddle. Throughout the 2000s, they were second fiddle to Intel because Intel ruled the PC chip market, and if you wanted something a little bit cheaper, you would go with AMD. And AMD always wanted to compete with Intel, but could never quite deal with their top-end processor. If you were in the middle of the range there, they could go ahead and box with them, but they could never really get to the top. Then fast forward to the 2010s, 20-teens, and all of a sudden now, not only are they second fiddle to Intel, but they're also second fiddle to NVIDIA, because NVIDIA was the top-of-the-line graphics card, and then here comes AMD again. Can't quite box with NVIDIA's top card, messes around with the middle of their lineup, but again, second fiddle. Well, times have changed here a little bit, specifically in the PC chip market, because Intel's dominance has pretty much fallen. Not only are they losing out on the top end of the PC market, but when it comes to data centers or servers, things like that, they're just not cutting it. So AMD is really gaining market share there in the PC market when it comes to chips, but also some really great graphics cards coming from them. So they're sitting up there with NVIDIA going toe-to-toe. Now, NVIDIA still has the top end of that market pretty much, but AMD is really starting to make a move. And if you're, one of these PC gamers and you're going out there looking for a next graphics card, AMD is certainly on your mind. And if you look at the crypto mining, that's a big time thing too, even though that market has died down a little bit. But AMD really doing some good things, and that is showing up not just in the stock price, but also in the earnings. So let's take a look here on Zacks.com at the price, consensus, and EPS surprise chart I have pulled up for you here. All right, so looking here at the price, consensus, and EPS surprise chart, my favorite chart on Zacks.com, the black line corresponds with the right y-axis, which is the price. The multicolored lines represent the evolution of our Zacks consensus estimates over time. Those correspond to this left y-axis, and you can see here a very positive trend in earnings. So these estimates continue to be on the rise year over year, really hiking up here. If you look at 2021, look at these numbers. Just the huge gap between 2021 and 2020, that represents the growth in EPS estimates year over year here. And you can see going from a little over $1 in 2020 to getting up close to 160 for 2021. That's a big reason for this real positive trend that you have in the stock price. And if you notice, this is following this strong earnings trend. So that tells me that this is something that could last for a while here on shares of AMD. Real positive earnings trend. Stock is moving in the right direction. So I think that this is definitely going to be my top stock pick of the week for you here. That's AMD Advanced Micro Devices.
Zoom Video is really one of the hottest names on Wall Street as millions of people flock to its video conferencing platform amid this big stay-at-home push. So for those of you who don't know, Zoom went public last April, and it offers businesses, schools, governments, consumers, and more really the ability to connect via video, voice, chat, and content sharing. And Zoom's offerings were already attractive in today's digital world, and its overnight coronavirus-induced expansion could really help it in the long run, especially if companies find the current remote environment pretty attractive and seamless, so you could see more people maybe working remotely going forward. Looking back, ZM posted strong Q4 results in early March, with its fiscal 2020 sales up a whopping 88%. So it closed the year also with roughly 82,000 customers with more than 10 employees, which was up 61% from a year ago. So that's a big number to focus on going forward. It's something that the company hopes will grow as well. And these results obviously don't even really factor into the coronavirus yet. And so for that, its founder and CEO wrote in April, and on April 1st post that the maximum number of daily meeting participants, both free and paid, conducted on Zoom was about 10 million as of the end of December of last year, so December 2019. This figure soared all the way to 200 million, and that was in March. So it went from 10 million at the end of December all the way up to 200 million, both free and paid. And this is really part of that, as I mentioned, that bigger coronavirus-induced expansion. And so despite some of the worries, which obviously people might have heard, they've had some security concerns that have come along with this rapid proliferation of the site, but the stock has already bounced back after slipping on some of those worries. The stock is now up 142% over the last year and 136% in 2020. So this is crushing fellow stay-at-home stocks such as Netflix. And then since it's a Zacks ranked number one buy right now, I wanted to note that so right now it's full year 2020 earnings estimate is up over 59% from where it was before it reported. And it's 2022, so next fiscal year, is up 58%. So 59 and 58% earnings revisions from where it was before it reported. And then we're currently calling for its sales to climb about 65% in Q1 and about 48% for the full year. So up from the big jump last year. And then the bottom line, we're calling for a 233% jump this quarter, about 23% jump for the full year, and then another 31% jump at next year. So some big top and bottom line improvement for Zoom. And as I mentioned, it's the Zacks ranked number one strong buy. It also rests in an industry that sits in the top 21% of our more than 250 Zacks industry. And for being a pretty company that's pretty new, only been on the public markets for a year, its balance sheet is pretty solid, which will help it at the moment. And amid all of this, they do face some competition. This is from Microsoft. Verizon actually recently agreed to buy a video conferencing company that competes against Zoom, and that's called Blue Jeans. And Facebook is actually rolling out its own offerings as well. But I think Zoom's in a good position, and it also kind of shows that this broader video conferencing business is something that all of these big companies, Microsoft, Verizon, and Facebook, all see as being worthwhile. So Zoom already has a great position. They're already a verb, Zooming, Zoom bombing as some of their privacy issues. But more than anything, all of this at the moment shows that Zoom is an in-demand business right now, and it has some long-term play as well amid our digitally connected world. But if you don't see that long-term appeal, it certainly does seem like a strong stock. It's certainly a nice near-term safe play, as its business is certainly not hindered by the coronavirus at all, and it's actually booming because of the coronavirus. So anyone who's thinking about Zoom now might be worth buying it as it continues to go up, especially in the near term.